window.
Hello traders, Gary Wagner here. It is approximately 9:40 a.m. in Honolulu, Hawaii. It is Monday, the 15th day of August, and this is the Daily Report for Gold. We have gold trading up in a tear once again today. What a wild couple of days we've seen. The interesting thing is, as it opened up in Australia yesterday, we had the market trading quietly and then trading quietly lower. In fact, intraday, and we're looking at a 30-minute chart, but intraday this market actually fell to a low of about 1730, that's correct, on an intraday low. As you can see, let's break the activity down. This is the 15th, and what is being labeled as the 14th on my chart, of course, is Monday in Australia. And the other day worth noting, of course, this would be Friday, as we all have known and seen the market trade. Now, here's what's interesting. Let's take a look at these last three trading days, meaning Friday, Sunday, and today's activity here. The interesting thing, obviously, is that as the market came in, what I found most noteworthy was the fact that as the market began to trade lower, once it hit Hong Kong, that would be this area right in here, these lows, they brought that market up substantially, in fact, bringing it up to, what, about 1745, as you can see, and then the market drifted lower again, forming this really strong double bottom in here. You get a drift, of course, a reconfirmation of that bottom, and it was to look back no more, so to speak, up, and away, and you can see the trading activity as we went into our trading today in New York. Of course, this video is following a buy signal that was issued earlier this morning. From the very short term, I want to begin to move out further and further in times in terms of the actual category, meaning this is a 720-minute straightforward candlestick chart. You can see when we look at this chart, the same information is just being conveyed a little bit differently, but you have a series of lows. Each of those lows are showing a higher low and a higher low. Of course, this is the breakout that we're experiencing now. In terms of where we think we're going, I talked about that on Friday. We're going to touch upon that at the end of today's program. But I thought it's absolutely worth noting that when you look at it on a half a daily chart, meaning there are two candlesticks per day, you can see that series of higher lows. The other thing that you'll want to do is to actually take a look at this marketplace in terms of its average chart, which is the Heikin Ashi. So I'm going to go ahead and put that up for us now. And as you can see, what you find, and of course realize, traders, that the average or Heikin chart is always going to lag. After it hit that high, this is the 1813 that we're looking at, 1817 in COMEX. That market came down. You had a series of red candles. Those red candles also had an absence of upper wicks. Size-wise, they're fairly much in the medium category, which is showing a decent-sized trend. And even on these longer-term charts now, we have that pivot point right in here. Of course, that pivot represents a turning point on the average chart. The next chart that I want to take a look at is going to move back to a 360, but it's been our primary chart that we have been calculating not only our Elliott wave, but our different retracement levels that we were looking at. And here's what we're finding interesting. When we take a look at this market itself, in terms of the pivot point, my sentiment was somewhere in the area of 1730. Here you've got a 38% retracement at 1724. And that retracement, I believe at this point, will hold. Realize this is a longer-term retracement, traders, because I am looking at my zero line, of course, is at that record top, 1813, and the 100% line, of course, is at the beginning of this rally, which I'm labeling at 1580. So you've got a sizable trading range itself, and the retracement itself is 38, which is definitely very much in line as an acceptable retracement. And therefore, my belief is that in terms of the long count, and this, of course, is our intermediate right in here, but it all starts back here at the beginning of July. That's the beginning of the fund traders. And that's when the market was trading, call it 1480. We have wave 1, we have wave 2. From wave 2, we go to wave 3. That gives us our new record top, 1813. We have a 38% retracement. That takes us to wave 4. My belief at this point is wave 4 is probably concluded, and we're off and running. Now, is there any other alternative that might take place? Well, traders, quite frankly, there is, and we do want to be aware of it. And the other alternative would be that this particular wave 4, rather than it being a simple wave, because we could break this up, but as you can see, it was a hard sell down. You might get something like, and I don't think so right now, but you might get a 1, 2, 3 count, ABC, so to speak, and then move higher. That would be the only other alternative. In other words, traders, what my sentiment is right now is that this market is going to continue to head higher. In terms of what it's going to do in the immediate future, those are the two possibilities. And as far as I'm concerned, this type of a breakout should signal a conclusion to our wave 4. Final chart I want to look at today is going to be a daily chart. And really, I'm looking at this daily chart. This is what I want to call the long count. And this is also what I want to bring to your attention, traders. As you know, when we look at this, I have always called this the intermediate count. And then on top of the intermediate count, of course, is a much longer count. This being 1, 2, well, actually, excuse me. 1 starts well back here. If we take this, say, from the conclusion of this C wave, so we get 1, 2, 3, 4, and this being in our 5th wave. Now, what that tells you is two things. First of all, I am looking for higher prices, but if in fact this long count is correct at the conclusion of this wave, at the conclusion of wave 5, which, you know, on my short count, we are now in 5 of 5. That's what we've been talking about. We have been focusing in on this count, but in terms of our major, if we are in a 5 of 5, you should expect on a technical basis, the real possibility of an extended correction. Now, in a market that's this bullish, I would expect an extended correction to be more perceived as a sideways market. I'm not really looking for this market to drop and drop hard. I think that the fundamentals are much too strong. But traders, it absolutely is worth noting, and because it's worth noting, I do want to bring it to your attention. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.
Many sights to see, and when I look in my window, so many different people to be, that it's strange